Hello everyone, welcome to today's lecture. So this lecture is in continuation to the last lecture wherein we discussed about the company audit, CFS, Schedule 3, CARO. We did solve some questions on the company audit and CARO. We discussed about, some applicabilities of the sections of Companies Act like 144, 143, 141, and we discussed a few questions on that line. Today, we will be continuing that particular topic. We will be continuing in the same way. We will be doing the questions. We'll be trying to solve the practical problems and we'll do more practice of that particular topic. Okay, so let's start. Just a summary in last lecture, what type of questions we did. One of the question was with respect to the appointment of auditor with respect to when he was providing the service which was not permitted under section 144. Same way we saw on the same line appointment of auditor directly or indirectly rendering a service. We understood the concept behind it. We understood the concept of services under section 144 and accordingly we decided some questions on that area. Then we went ahead, we went ahead and we did some questions on the CARO. Now let's move further and discuss some more questions. Okay. So the question is, ABC Limited borrowed 2,000 crore from Superbank, the principal of which was repayable after 5 years. And interest was payable at the end of each year. Okay, so ABC Bank borrowed 2,000 crore from ABC Limited borrowed 2,000 crore from Superbank. For 4 years, ABC Limited paid the interest amount on time. ABC Limited defaulted on the 5th installment of the interest payment and principal due on 30th June 2021. On 31st January 2022, ABC Limited approached Superbank and World Bank to restructure the existing liability. As a result, the existing principal and outstanding overdue interest was restructured in a new loan amounting to 500 crores. So they defaulted on the first loan. Then they reached out to the Superbank and they asked Superbank to restructure the loan. Superbank restructured the loan and the new loan amount was 500 crores. Both banks approved and signed the restructuring agreement on 8th March 2022, before the financial year's close. The management did not provide any disclosure for the default on loan on the belief that the old loan ceases to exist and the new loan has a maturity of 5 years. And everything was resolved before the year end. Okay. In the light of above, in the light of this scenario, kindly guide what should be the appropriate disclosure by the auditor. Sorry. What should be the appropriate disclosure by auditor in the current scenario? So think about, there was a loan. The loan was first being repaid for 4 years. Then in the 5th year, there was a default. Means company was not paying the amount. They reached out to the Superbank. Superbank restructured the loan. They got a new loan, but that was before they somehow got everything closed by the 8th March 2022 before the year close. Now the company was of the opinion that okay, before year close we have restructured the loan, the old loan ceases to exist, there is no issue with us, everything is fine. That's why we will not disclose anything on account of default. Now what the auditor should do and where the auditor should report. Sorry. Come on, guys. Good morning, Viraj. Good morning, Namrata. Good, Janvi. Janvi, can you specify the exact where in that particular your area, like that you are mentioning? It will be more appropriate if you guys, can answer with either, clause number where or exactly where it is required to be reported. Good morning, Manish. Okay, yes, Namrata, but where? That's the important part where the disclosure or the reporting is required. Come on, guys. Where the disclosure or the reporting is required in the current case. Good, Janvi. Very good. So we need to understand where the reporting will be required. See, first of all, understand which are the places the auditor is required to report this particular issue. Okay. So one could be your audit report, one could be your CARO, one could be some other annexure. Okay, one could be tax audit. But in the current case, what do you think is the appropriate place for reporting of this particular issue? But make sure to understand that before the year close, both bank approved and signed the restructuring agreement on 8th March before the year close. Means everything was rectified before the year end. Okay, Namrata, good. Good, Pradeep. Pradeep, can you specify the exact position in that particular report? Can you specify the exact position? Like, I want specific answer to this particular question. Like, okay, this place, this clause, or this something with a number. Because in exam also you need to write specifically that okay, here we will be reporting. Okay, one of the place will be, let's say for example, first of all, let's understand two parts. Number one, whether we will be reporting this particular issue in our audit report. Okay. Now, here the company or management has not provided any disclosure for the default on the loan. Okay. There was a default, but there was no disclosure provided. Now, first of all, understand whether Schedule 3 requires any such disclosure, whether Schedule 3 requires any such disclosure for the loan, that is, whether there was a default or something. Now, again, ABC Limited is there. There's a borrowing. We'll understand that, okay, Schedule 3, Part 2 will be Division 2 will be applicable here because of the amount and because of the entity structure. So division 2 we will be understanding, okay, division 2 will be applicable in the current case. Now, if the division 2 is applicable, then what details are required to be given from schedule 3 side on loans that are required to be loans which are during the year restructured or outstanding balances, or if there is any default. So is there any requirement from schedule 3 side? First, you need to answer from that point of view. Why I'm asking for the schedule 3 is, once you will answer whether any reporting requirement is there in schedule 3 or not, you will understand whether, okay, now management has not disclosed anything, but there is a reporting requirement in schedule 3, means there is a deviation from applicable financial reporting framework. So it will require a modification in my audit report if there is a reporting requirement. So first of all, you need to understand whether there is a reporting requirement in schedule 3 or not. Okay. Now, if you see the schedule 3, okay, over there is a reporting requirement for borrowings under the head of non-current liabilities. Now, in case of borrowings, if you read appropriately, okay, it asks you the details like secured, unsecured, whether there was any guarantee given, all those things of borrowings, okay, period of repayment. So in borrowings, there is a disclosure required like what is the period of repayment, terms of repayment of the loan and other loans, okay, period and amount of default as on the balance sheet date in repayment of borrowings, and interest shall be specified separately. Okay, so if you see schedule 3, schedule C talks about period and amount of default as on balance sheet date. Okay, if there is any default on balance sheet date in repayment, in borrowings and interest, then it shall be specifically stated. But if there is no default on balance sheet date, then there is no requirement of reporting that amount. However, there is a detailed reporting or disclosure required with respect to the terms of repayment of loan and other conditions of the loan. Okay, so that is something is required to be given as per the schedule 3. So terms of repayment, okay, and other terms of that particular loans are required to be stated, okay, in my financial statement. Now, in this question, the management does not provide any disclosure for the default. Okay, so here we are talking about only for the default. So we understand that, okay, rest of the disclosure has been given, only the default thing has not been given on the balance sheet date, and hence, okay, this is in line with my schedule 3. This is in line with my schedule 3. So as of now, modification is not required in audit report. Okay, so I'll assume only disclosure with respect to the default has not been given, because the question says that way, that the management did not disclose for default on loan on the belief that the old loan ceases to exist and the new loan has a maturity of 5 years and everything was resolved before the year end. So my schedule 3 talks about if there is any default on the balance sheet date, then we are required to report on that. But there is no default on the balance sheet date in the current case, and hence no further detail is required to be given. Only other details like terms of the loans and everything is required to be given, which we assume that has been provided in the current case. So as of now, there is no deviation from the applicable financial reporting framework or my schedule 3. So as of now, if there is no deviation, then there is no requirement of my modification in audit report. Okay. So first thing, there is no modification required or there is no detail required. Okay. However, However, if if management has already provided the details, okay, with respect to the restructuring of the loan, but they did not provide any detail on the disclosure, what I can do is I can enter an EOM paragraph to bring attention of the user to this particular point. But that is subject to management has appropriately disclosed that we are assuming over here. So EOM can be used here, EOM paragraph. Okay. Now, this was the first area. Second area is the CARO. Okay. Under CARO, there is a para 3, clause 9, para 3 and clause 9 of para 3. Okay. That requires reporting on whether the company has defaulted in repayment of loan or other borrowings or in the payment of interest thereon to any lender. If yes, then the period and the amount of default. In that CARO, it is not mentioned that as on balance sheet date. In Schedule 3, it is mentioned as on balance sheet date, but in CARO, if you see, it is said that, okay, default to any lender. Then they are asking period and the amount of default. If you, and there is a table which is required to be given. I'll show you the table over here. So this is a particular table there which requires us to be report like nature of the borrowing, including debt securities, name of the lender, amount not paid on due date, whether principal or interest which was defaulted, number of days delay or unpaid, and remarks. So if you see here, it is not asking whether it is on the balance sheet date or not. It is just asking the number of days of default. Okay, and if you have rectified it also during the year, still we are required to report the number of days. So in CARO para 3.9, we are required to report the details of default during the year. Okay, so we are required to report the details of default during the year. Clear? So I will be reporting in CARO, but I will not be modifying my report. Understood? Any doubt? Any doubt, guys? Okay. In case, okay, so there is one question. In case the company restructured its loan before default, as they knew they will default, so what will be the treatment? See, if there is no default, before that they got restructured, then it will not be reported in CARO also or in my, what do you say, or financials also. Only the fact there was a restructuring of the loan, that will be reported. So if the company restructured the loan before default, then there will be no reporting in CARO because there is no default there actually. Another thing is how to remember the clause number, see, the more you will practice, only the way to remember the clause number is just the practice. Trust me. The more you will solve the questions, you will remember, okay, loan, there was 3(9) of CARO. Okay, this particular clause of CARO was this particular. Because you have solved the question, you will remember that particular clause number at least. Okay, if you try to solve a particular question, then by solving the question, you will get that particular clause number, para number of the CARO, or clause number or section number of the Companies Act remembered. Let's say, for example, if you ask me, okay, 144 services, 143 reporting powers and duties of auditor, okay, rules. Because the more you will practice, the more you will remember everything. Yes, in case if the company has restructured the loan before default, okay, and when I say default means on due date you are not paying the amount. So before the due date approaches, the company goes to the bank and restructure its loan, then there is no default and there is no reporting required. Clear? Okay, let's bit of modify this particular question only. Now, we are saying that the default started on 30th June 2021. Okay. Now I'll change few dates. Instead of 30th June 2021, what if I make it 30 June 2020? So the default started a year ago. 30th June 2020. Okay. And the restructuring happened on same 8th March 2022. Will your answer change in the current case? I am saying that on 30th June 2020, the default started instead of 2021. Will your answer change in the current case or not? Come on, guys. Will your answer change in the current case if I just change the default start date? Good, Manish. Where the change will be? Where the change will be? Come on, guys. Where the change will come? Absolutely correct, Manish. Okay. Good, Namrata. Good, Janvi. Okay. So I'll tell you. See, in schedule 3, okay, there is one thing, like if there is a default on 30th June 2020, which got rectified on 8th March 2022, so there was the financial year close in between. The financial year close was 31st March 2021, and then it will come on 8th March 2022, the rectification of the or restructuring of the loan. Okay. Now, on this financial year close, there was a reporting required, okay, for the default. If on 31st March 2021, if there was a reporting of default required, see what my schedule 3 is saying. This is schedule 3, my division 2 for the borrowings. Okay, this is for non-current liabilities, borrowings. What it says that the period and amount of default as on balance sheet date in repayment of borrowings and interest shall be specified separately in each case. Okay. So default on balance sheet date on 31st March 2021, there was a default on balance sheet date which is required to be reported. The same default is required to be reported in 31st March 2022 also. Reason because of the comparative. Because 21 will become comparative for the 22. Now, on 31st March 2022, I need to provide the detail. There was a default on 21, which got restructured during the year and got rectified, before the year close of 2022. But I need to provide the details because there is one balance sheet close in between. And if the management still does not provide any disclosure on default, then there is an issue. Because there was a default on 31st March 2021, as a part of comparatives, they need to provide the details of default. So this particular that I was saying there will be no modification will convert into a modification because applicable financial reporting framework has not been complied. So if this is a 30th June 2020, management still does not disclose the default in financial statement, I will report in CARO. The change in the CARO will be number of days of delays of unpaid. So the days will increase. But in my audit report, there will be a modification now. If default started on 30th June 2020, then modification will be required in audit report. Understood? I hope it is clear. See how I just changed a bit one date and your case changes because you need to understand what is the requirement of schedule 3, what is the requirement of CARO. CARO is pretty simple. Without any balance sheet date or anything, if there is a default during the year, report it. Doesn't matter when the whether it is on the balance sheet date or not. If it is during the year, if there was any default during the year, which is started from like any previous year or whatever, if the default was continuing in the previous year, okay, then you are required to report in CARO. That is fine. But the complexity increases when you look into Schedule 3's requirement, because Schedule 3 specifically talks about as on balance sheet date. So Schedule 3 says that period and amount of default as on balance sheet date in repayment and borrowings and interest. If on any balance sheet date, okay, let's say 2021, if there is a default, I need to report it. If I'm reporting in 21, I need to same do the reporting in 22 because of the comparative, and I need to provide the details. Okay, good question. What will be the wordings of my modification in the current case? See, now if you refer to SA 705, okay, what SA 705 says that in case of a modification, okay, in case of a modification, let's say for example, when there is a modification with respect to non-disclosure or anything which is not appropriately disclosed, then in my basis of opinion paragraph, like basis of qualified opinion or adverse opinion, depending upon the amount and everything else is there. Okay, let's say we assume there is a qualified opinion, not the adverse opinion. Okay, now in that case, in basis of opinion paragraph, what is required to be done is when there is an issue, when there is a qualified opinion, I need to provide the details. Sorry, I need to provide the details of that particular verdicts. Let's say, for example, there was this particular disclosure required. Okay. Now, this disclosure has not been done. Like, okay, if there is a disclosure has not been done, then I need to provide the wordings with respect to how the disclosures are misstated. What is missing basically in that disclosure? Let's say, for example, in the current case, the company has not disclosed anything about the default. So, in basis of opinion paragraph, I will write that during the year, there was a restructuring on the of loan where there was a default starting from 30th June 2020, which was continued till 8th March 2022. Okay. The default was rectified on 8th March 2022 by way of restructuring, and the management has not provided any disclosure in their financial statement, and our opinion is modified on that area. So this is how something we need to modify, draft our basis of qualified opinion para, and in that we need to provide the details of what is being missed by the management. So if there is any material misstatement in the narrative disclosures, then the auditor should provide an explanation how those narrative disclosures are misstated. Clear? Any doubt? Any doubt, guys? I hope you are understanding the current question. Any doubt? No? Good. Okay. Let's see one more question on statutory dues. Good question. Okay. Okay. So the question is, Homemade Private Limited dealing in FMCG projects has a turnover of 50 crores in FY 2021 and was paying their GST due on timely basis. In FY 21-22, the following GST dues are paid along with the reason for non-payment of dues. Okay. So the following GST were paid, and some, if there was some not paid, the reason for that. This is the due date of the GST, amount paid date. Okay. This is the amount due. Okay. And amount paid. So if there is any difference, it will be appearing here. So 20th May was due, amount was fully paid on 20th May. 28th June was due, amount was fully paid. July, amount fully paid. Okay. August, again, 20th August due, amount fully paid. 20th September, there was a due of 16 lakhs, but not a single amount was paid. Why? The company did not have enough funds to pay the GST due amount, and till the end of the year, the same was unpaid. 20th October, this was the amount that was required to be paid, 36 lakhs. But on 20th October, what they paid, the company paid 27 lakhs only. There is a less amount paid. Why? The company paid less as the company believes that the department has allowed less tax credit compared to what they were entitled to. Also, the company filed a representation with the department to revalidate the tax credit available to them. The company took no further action in this regard. Then, again, 20th November, full amount paid. 20th December, full amount paid. 20th Jan, full amount paid. 20th Feb, nothing was paid because the company did not have enough funds to pay the GST amount due, and the same was unpaid till the end of the year. March, full amount paid, and then the April, full amount paid. Now, in the current case, you are required to report where this particular details will be reported. Where you will report these particular details in audit report. So there are 3 months where the company has either not paid any amount or has paid less amounts of GST. Where you will report this particular thing in your audit report. This is pretty simple and straightforward. This is pretty simple and straightforward. Where you will report this particular details. Come on, guys. Where you will report this particular details. Good journey. Come on, guys, quickly. Come on, quickly, guys. Where we will report and which amount. Okay, so there are 3 months that are required. One was the September due. Okay, this September due. One was October due and one was February due. Which you will report and where. I have 3 months, September, October, and February. Which you will report and where. which you will report and where? Come on quickly. So I'm saying there are 3 months, September 22, October 22, and actually that is Feb 23, my mistake. There is a typo over there. It should be Feb 23, not 22, sorry. Okay. So this should be 23. There's a typo. So Jan 23, Feb 23, these are the 23. Okay. So which amount you will be reporting and where? September 22, October 22 or Feb 22? The due dates were October 20 October, 20 September and 20 February. Absolutely correct, Namrata. Good, very good. Come on, guys. When it is okay, I'll tell you. Now, what is the scenario? See, where the reporting is required to be done. Is there any reporting requirement in Schedule 3? Is there any reporting requirement in Schedule 3? Answer is no. There is no reporting requirement in Schedule 3. Okay. Now, if there is no reporting requirement in Schedule 3, then we need to understand whether there is a reporting requirement in CARO. Now, for that, we need to first understand whether the CARO is applicable or not. Okay. So, first of all, to understand whether the CARO is applicable, what I need to see is, okay, is there any exemption given to this company? Is this a small company? So last year its turnover was 50 crores in 2021. So for sure it is not a small company, because for small company, the limit of turnover is 40 crore. So this is more than that, and hence this is not a small company. Fine. So not a small company, not a OPC, not a Section 8 insurance banking, not there. Okay. Then there is the exemption of private limited company. But for that, there is the turnover limit is 10 CR. The turnover should be less than 10 CR, and hence this is also not applicable. So anywhere the exemption is not applicable to this particular company. Hence, what will be the scenario is CARO is applicable to this company. So first I establish, okay, now CARO is applicable. If CARO is applicable, then there is a para of statutory dues, that is 3.7. Para 3 clause 7 or para 3.7 of CARO 2020, which requires you to report okay, which requires you to report that whether the company is in regular in depositing undisputed statutory dues, including goods and service tax, provident fund, and all other statutory dues to the appropriate authorities. If not, then the extent of the areas of outstanding statutory dues and as on the last day of the financial year concerned for a period more than 6 months from the date when they become payable shall be indicated. Again, for a period more than 6 months from the date when they become payable. So if there is any due which is outstanding, statutory due amount which is outstanding for more than 6 months from the date when it become payable, and the 6 months like as on the date of last year of last day of the financial year, that is on my balance sheet date. If on my balance sheet date, if there is any statutory due which is outstanding, which is not being paid for more than 6 months, then that particular amount I am required to report here. But that should be undisputed statutory dues. Undisputed. Okay. Now, with respect to the disputed one, there is another clause, that same part 2 of that same clause, or para 37, which talks about where the statutory dues referred in A have not been deposited on account of any dispute, then the amount involved and the forum where the dispute shall be pending shall be mentioned. A mere representation to the concerned department shall not be treated as a dispute. In the above cases, number one, first I need to identify which are the statutory dues which are outstanding more than 6 months. So that is only one. This September one. This September one is outstanding for more than 6 months from the date when it becomes payable, 20 September. If I take the due date of 20 September, as on the balance sheet date, it is outstanding for more than 6 months. This one from 20th October, it will not be 6 months, and again February will not be 6 months. So only this particular amount which was not paid will be reported in part 1. Now, if you see the part 2, which talks about where the dues referred in subclause A, this one. Again, 6 months criteria. If there is any dues which are outstanding for more than 6 months, but they have not been deposited on account of dispute, then it will come to part 2, this one. So again, the 6 months criteria will be applicable here, and if the 6 months criteria is applicable, my October and February one will not come. Only September one will be reported in the CARO. So due on 20th September will be reported in CARO that okay, the amount of undisputed statutory dues which has not been paid, outstanding for more than period of 6 months from the date when they become payable. So only due of GST outstanding from 20th September 2022. That's it. That will be only reported. Clear? Any doubt with respect to this? Any doubt? The point here to understand is that the statutory dues that are required to be reported in para 37 are required to be reported when there is an outstanding for more than 6 months from the date when they become payable. If there is any due which is not being paid but the 6 months has not been elapsed, then that will not be reported in my CARO. Clear? Any doubt? Any doubt, guys? No? Okay, good. Let's check one more question. Same. Homemade Limited obtained the overdraft facility where the sanction limit was 5.5 crores. Sanction limit. Turnover 120 crores for FY 21-22. However, the company has only utilized 2.5 crores until FY 21-22. So out of 5.5 crore, 2.5 crore was only utilized. Rest was not utilized. Okay. While reviewing the quarterly returns submitted to the banks under the predefined agreement of overdraft facility, okay, APAL and company statutory auditors realized that the submission for the quarter ending 31st December 21 was inappropriate. Okay, so the quarterly reporting that was required to be done was done, but that was inappropriate. Trade receivables were overstated by 2.5 lakhs, and correspondingly, inventory was understated by 2.5 lakhs. So there was the difference of 2.5 lakhs. Upon inquiry, it was identified that this happened due to incorrect mapping of subledger accounts to the general ledger. However, this issue was rectified in the quarter ending 31st March 2022. Kindly assist the audit team in reporting the above matter at the appropriate place by considering the overall materiality at 5% of the turnover and performance materiality at 50% of overall materiality. So two things. Number one, the company was required to submit quarterly returns to the bank, where in the December quarter there was a issue that the trade receivables were overstated by 2.5 and inventory was understated by 2.5. Sanction limit was 5.5 crores. However, company only utilized 2.5 crores. So in one of the quarterly statement, there was an issue. So quarterly statement for quarter ending 31st December was inappropriate. Issue was rectified by the end of 31st March 2022, where you will report. Assume again, division 2 is applicable to the company of schedule 3. Okay, one more thing I'll add to the question for your understanding so that you can, no disclosure was made by management in financial statement regarding discrepancy in trade receivable and inventory Okay, so no disclosure was made by the management in financial statement with respect to this discrepancy because it was rectified before the year end. Okay, so as it was rectified before year end, management did not make any disclosure in the financial statement. Now you are required to report where you will state this particular matter. Very important. So no disclosure in FS is being made. Okay, I assume, considering the amount of turnover and the type of company, it's not a private limited company, it's a limited company, it is having 120 crores turnover. I assume that division 2 of schedule 3 will be applicable. Okay, will be applicable. Good, Jagmeet. Consider the materiality also. Consider the materiality. Overall materiality is the 5% of turnover and performance is 50% of the overall materiality. There was a misstatement of 2.5 in December quarter, which was rectified before the year end. The overall materiality is 5% of the turnover. 5% means 120 crores, 5%, the overall materiality. Which will come to 6 crores. And the performance materiality is 50% of overall. That is, again, 3 crores. And the difference was only of 2.5 lakhs. Even that difference was rectified before the year end, that is in the quarter ending 31st March 2022. Before year end, it was rectified. Where you will report this particular matter. Come on, guys. Where you will report this particular matter. Very important. Manish, in the current case, the discrepancy was of only 2.5 lakhs, and that was on account of wrong mapping of sub-ledger to the general ledger. Okay. There has not been any disclosure by, there was no disclosure by management. So Namrata, I think you should reconsider your answer once, because there is no disclosure in the FS by management. Management does not disclose anything because it was rectified before the year end. And December quarter, the submission to the bank was inappropriate. There was no issue in financial statements. Where you will report this, guys? There are lot many places you can report. I'll give you an option. Let's say key audit matters, other matter paragraph, EOM, modification, other information, or you will not report. So what you will do, which course of action you will choose for this particular observation. Technically, it's not even an observation, but what course of action you will choose over here. Overall materiality is 5% of the turnover, which is 6 crores, and the amount is only 2.5 lakhs, way below my materiality, way below. Sorry. Come on, guys. Where you will report this particular matter. Where you will report this particular matter. Take your time, but think. Okay, number one, whether, okay, I'll ask one by one, whether you will modify your opinion or not. Whether you will modify your opinion in the current case or not. Whether you will modify your opinion in the current case or not. Come on, guys. Okay. Good, Namrata. Come on, guys. I'm waiting for your answer. Whether you will modify your opinion in the current case or not. First question. We'll go step by step. Okay. Okay. Good. Good, Janvi. Manish, Pradeep. I'm waiting for your answer. Okay. I'll write it here. So, number one. Modification in audit report. Okay. So most of you are saying no modification, the amount is below the performance materiality. Okay, it's only 2.5, like where my performance materiality is 3 CR. Okay, performance materiality is 3 CR, but the amount of the discrepancy was only 2.5. Okay, number 2, whether you will report in EOM para, whether you will report in EOM para. Guys, whether you will report this matter into EOM para. Or you will report in other matter paragraph, where you will report. So I will not report in EOM para. I will not report in EOM because management has not disclosed. And for EOM, I use when I use EOM, when there is an appropriate disclosure by management or management has disclosed in financial statement, I just want to bring the attention of the user to that particular disclosure. So no reporting in EOM because no reporting in FS has been done by management. So I cannot bring attention of the user to that particular. Okay. So I cannot report in EOM para. That is fine. Can I report in other matter paragraph? Can I report in other matter paragraph? Guys, quickly. Can I report in other matter paragraph? Okay, Namrata. I cannot report in other matter paragraph. No reporting in other matter paragraph will be done. Because if I need to report in other matter paragraph, okay, if I need to report in other matter paragraph, so what is the scenario? It should be related to the audit procedures, auditor's responsibility, or it should be related to the audit report. So if this is related to the understanding of the audit, auditor's responsibility in audit report, then only I can report in other matter paragraph. Otherwise, I shouldn't be. So this is not related to the audit, understanding of user understanding of audit. It is not related to the auditor's responsibility. It is not related to the audit report. Hence, no reporting in other matter paragraph, it will be there. Because not related to user understanding of audit or auditor's responsibility or auditor audit report. Okay, so hence I will not be reporting in other matter paragraph. Now, to understand Am I required to report in CARO? Am I required to report in CARO? Am I audible, Janvi? Okay. So, am I required to report in CARO? Okay. See, I need to understand whether I'm required to report in CARO or not. Okay. I'm required to understand whether I'm required to report in CARO or not. So I need to understand whether the reporting under CARO is required or not. Anyone? Whether CARO reporting is required or not? Will you report this matter in CARO or not? Come on, guys. I'm waiting for your answer. Okay. If yes, then where? Which para? If yes, then which para? Okay. Good, Namrata. Okay. Now let's understand with respect to the CARO. There is a clause 3, para 3.2 in the CARO. Para 3.2. Okay. Which talks about reporting on quarterly returns. Which talks about that reporting on quarterly returns. Now, what is this reporting on quarterly returns? Okay. Reporting on quarterly returns basically sorry, is required to be done when there has been, a facility obtained by company. Okay. So this is para 3.2 with respect to quarterly returns that is required, reporting required under CARO. So what it says, whether during any point in time of the year the company has been sanctioned working capital limit in excess of 5 crores in aggregate from the banks or financial institution on the basis of security of current asset? If yes, then whether the quarterly returns or statement filed by the company with such banks or financial institutions are in agreement with the books of account of the company. If no, then the give details. In current case, whether there has been sanction of more than 5 crores. So yes, there has been sanction of more than 5 crores. There was a sanction of overdraft facility of 5.5 CR, which is more than 5 crores. So it says during any point working capital limits. Overdraft facility is the working capital limits. So I was sanctioned more than 5 crores. Whether the company is submitting like whether the quarterly returns or statement filed by the company with banks or financial institutions are in agreement with the books of accounts. So for one quarter, there was a disagreement of 2.5 lakhs. But I'm not here, required to use materiality. I am not required to use materiality over here in CARO. So in CARO, yes, para 3.2 reporting will be there without any materiality. So I'm not required to see materiality when I'm reporting in CARO, because CARO specifies their own threshold, like 5 CR of sanction limit. If my credit facility is more than 5 CR of 5 CR, okay, then I'm required to report whether the quarterly returns are going or not. If they are going, whether they are in agreements with the books of account. If not, then provide the details irrespective of the amount of the difference. Clear? Means CARO reporting will be there, that I know. There will not be reporting in EOM paragraph, OM paragraph. There will no reporting in EOM and OM paragraph. Now coming to Schedule 3 requirement. Again, is there any requirement of Schedule 3 to report on this matter? Answer is yes. So some of you might have missed out this detail, but in Schedule 3, there is also the same requirement equivalent to CARO in disclosures, in notes, which says that where the company has borrowing from the bank or financial institution on the basis of security of current asset, it shall disclose the following: whether the quarterly returns or the statement of the current asset filed by the company with the banks or financial institution are in agreement with the books of account. If not, then the summary and the reconciliation of the material discrepancies, if any, to be adequately disclosed. Okay. Now there are two things here. The word material discrepancy and whether the quarterly returns statement current asset has been filed by the company with the banks or financial institution are in agreement with the books of account. If not, then the summary of reconciliation and the reason for material discrepancies. So summary of reconciliation I am required to give, but the reason I am only required to give for the material discrepancies, if any, to be adequately disclosed. In the current case, management has, as I told you, management has not disclosed anything. If management has not disclosed anything, I need to then see whether there is a departure from financial reporting framework. If yes, then again there will be modification. So the first thing I told you that okay, there will be no modification, that was incorrect, because there is a departure from financial reporting framework. I am required to report as per the Schedule 3, which management has not done. If management has not made a disclosure, again there is no role of materiality in disclosure part, except for here, except for the reason. I am required to provide the reason for the material discrepancies, but summary of reconciliation or whether the quarterly statements are submitted or not, I am required to report irrespective of the amount. So in that case, yes, there will be modification also. So there will be modification in my audit report because there is a departure from applicable financial reporting framework. I have not disclosed a detail which was supposed to be required to be disclosed as per Schedule 3, Division 2. Here, if you see, these are the additional details which are required to be reported. So that's what the amendment, I think in 2021, where additional information, additional regulatory information is required to be disclosed. Okay, and in that there is one clause on quarterly returns. So in the current case, there will be reporting in CARO, there will be a modification in audit report. So irrespective of the amount of 2.5 lakh, I'll report in CARO. I'll provide a management is required to provide the details in financial statement. If management is not providing the details in financial statement, I'll modify my opinion. Material discrepancy, see again, when I talk about material discrepancy, that comes the materiality into the picture. Okay. Now, however, there is no definition of material discrepancies there. It's on the professional judgment of the auditor to decide whether the particular amount is material or not. CARO talks about in aggregate from banks and financial institutions means from all the banks, all the financial institutions, whatever loan I have taken, in total, if it is exceeding the 5 crore limit. So if I have taken 2.5 from one bank, 2.5 from other, 2.5 from third bank, so in total it is exceeding 5 CR, then I need this particular clause reporting and it will be applicable to me. Okay. Modification in audit report. See, number 1. As per the Schedule 3, the company is required to report whether the quarterly return or statements of the current asset filed by the company are in agreement with the books of account. I told in the question that there was no disclosure made by the management with respect to the discrepancy in the financial statement. Now, Schedule 3 says that management is required to report on this. Okay, whether there was an agreement or not. And if they were not in agreement, then the summary of reconciliation and the reason of material discrepancy. So reason I'm required to give when there is a material discrepancy. But summary of reconciliation and point A, that is whether they were in agreement in books of account or not, I need to report still I need to report, which management has not done. If management has not reported as per the Schedule 3, then there is an issue that financial statements are not in line with Schedule 3. When it comes to the disclosure part, okay, here I'll not see materiality because here the materiality is only applicable for reasons. Okay, the materiality concept is only applicable for reason. This reason for material discrepancy. When I say material means I'll apply the concept of materiality. For rest of the things, that is point A and summary of reconciliation, there is no materiality applicability. Irrespective of the amount, if there is a disagreement, I need to report that. If there was an issue with respect to the quarterly returns, I need to report. Management needs to report that in their financial statement. And if management has not reported, means they have not complied with the financial reporting framework. And hence, that becomes the point of modification in my audit report. Clear? Accordingly, I will modify my audit report saying that, okay, management has not complied with the financial reporting framework. They are not complied with Schedule 3 and they are not reported this particular fact, which was required to be reported as per the Schedule 3. Clear? Any doubt? So, reporting at two places. One, modification in audit report. Number two, CARO, para 3.2. Whenever a question comes that a particular fact, where you will report the particular fact, you need to understand whether what is the requirement of Schedule 3, whether there is any requirement of Schedule 3 in case of the company, or financial reporting framework in case of bank or anything else, whatever financial reporting framework is applicable. If that is complied, then fine. Number two, you need to understand whether CARO is applicable or not. If it is a tax audit, then tax audit. In case of tax audit, whether any reporting under any clause is applicable or not, and accordingly you need to report the matter. Performance materiality is a lower level of materiality than overall materiality. It is usually calculated for a particular line item, financial statement line item, or a particular area. So it's a lower level of materiality than overall materiality at the financial statement level, to understand if there is anything which is being left out or not. If you want to understand further on performance materiality, I'll suggest you to refer my lecture on SA 320, and there I have explained in detail about the performance materiality. Clear? Any doubt, guys? Any doubt with respect to this question? Any doubt? Any doubt, guys? Great. If no doubts, then let's take a quick 10-minute break. After the break, we'll gather back and start more questions. Okay, let's take a quick 10-minute break. Hello everyone, welcome back. So let's continue the session with the questions. Okay, now I'll take a few more questions on the same topic and we'll discuss some more concepts like fraud reporting and consolidation. Okay, let's start with that. Okay, the question is ABC and company were appointed statutory auditor for Superbooks Limited for financial year ending on 31st March 2023. During the audit, during the account receivable confirmation process, the team identified that certain accounts receivable were fake, and the team could not verify their genuineness. As a result, the audit team concluded that there is a fraud in account receivable with a potential impact of 10 CR. The audit team also identified that the balance of these account receivable was being carry forwarded for last 3 years. And every year there was a sale transaction which was then settled with book entry. However, for the last 3 years, no actual payment was received. In the last 2 financial years, the statutory auditors of Superbooks Limited were DEF and ABC and company were of the opinion that this fraud was pertaining to the previous year. Hence, DEF and company should be the one who should report this fraud to the management and the central government. Hence, no further reporting was done by ABC and company. In the light of section 143.12 of the Companies Act, kindly guide the responsibility of ABC and company in the current case. Okay. So, two things. One, there was a fraud, okay, in account receivable with a potential impact of 10 CR, which was, uh, you know, which was of sale and same transaction with settled with book entry every year. So there was a fraud of 10 CR. Okay, now this fraud was being carry forwarded since last 3 years. So the balance was last carry forwarded since last 3 years, and no actual payment was received in last 3 years. In last 2 financial years, the auditor, statutory auditor of Superbooks Limited were DEF and company. In current year, it was ABC and company, but in last 2 years, it was DEF and company. ABC and company decided to report this matter to DEF and company because this was pertaining to last 2 years. Okay, and ABC and company were of the opinion that DEF and company should report this matter to the management and central government. Kindly guide the responsibility of ABC and company. So you need to tell me what is the role and responsibility of ABC and company in the current case. What is the role and responsibility of ABC and company in the current case? Come on, guys. What is the role of ABC and company in the current case? Very important. Okay, good, Janvi. What is the role of ABC and company in the current case? Guys, pretty simple. You just need to think about from section 143.12 of the Companies Act. Just think from the point of view of section 143, what are the requirements of section 143.12 and how it should be, applied in the current case. Come on, guys. What is the requirement of section 143.12? Okay, what is the requirement of section 143.12? Leave this question apart. Just tell me what is the requirement of 143.12. What 143.12 says? Very important what 143.12 says. Because that is something we need to apply over here. Okay. Let's discuss the 143.12 then. I feel that 143.12 is not, you guys are not that much familiar with 143.12. Okay. Let's revisit 143.12, what it says. So 143.12 says that notwithstanding anything contained in this section, okay, if the auditor of the company is in course of performance of his duties as an auditor, has a reason to believe that an offense of fraud of such amount or amount as may be prescribed has been committed by the company or is by its officer or employees, the auditor shall report the matter to the central government. Okay. Now, what is the prescribed amount over here? Now, if you see prescribed amount involving such amount or amount as may be prescribed, that amount is 1 crore. Okay, this prescribed amount is 1 crore. Rupees 1 crore or above. Okay. So if there is a fraud involving of amount 1 crore or more, in that case, the auditor is required to report the matter to the central government. Nowhere it is mentioned that it is pertaining to, that the auditor is required to report to the previous auditor. Okay. Nowhere it is mentioned that the auditor should report the matter to the first previous auditor or the auditor previous auditor should report the matter to the central government. It is said that if an auditor of a company in the course of performance of his duties as an auditor has a reason to believe, okay, it doesn't matter of which year it is pertaining to. It doesn't matter to which year it is pertaining to, but if the auditor has a reason to believe, then he needs to report the matter to the central government. Okay, that a fraud has been committed by the company or by its officer, or sorry, or by its employees. Then the auditor shall report the matter to the central government, not the previous year auditor. In the current case, ABC and company, okay, has identified the issue. They are the auditors who are discharging their duties. If they have reason to believe that there is a fraud, then they have to report to the central government. You select one option from this. Come on, guys, select one option from the given case. Sorry. Which option you will select out of these four options? A, B, C, D. Which one? Come on, guys. Which option? You need to select one option. A, B, C, D. Which one? Namrata, your answer is correct, but you need to select one option from this. Quickly. Okay. Good, Namrata. Good. So let us see the options here. So option A, if an auditor is of a company has a reason to believe that the offense of fraud of 1 crore or more has been committed in the company by its officer or employee, then the auditor of that particular year in which the fraud has occurred shall report the matter to the central government. Hence, in the current case, DEF and company should have reported the matter to the central government, which is incorrect. So this is not the correct option. If option B, if an auditor has to believe, if the auditor of a company has a reason to believe that offense, if fraud involving 1 crore or more has been committed in the company by its officer or employee, then the auditor shall report the matter to the central government. Hence, in the current case, ABC and company should have reported matter to the central government. This appears to be correct. Okay, so as of now, I'll mark it correct. Let's see the rest of the options. If an auditor of the company has a reason to believe that an offense of fraud involving 1 crore or more has been committed in the company by its officer or employee, which is not pertaining to current year, then the auditor shall report the matter to the management and those charged with governance with an instruction that they should inform to the previous year auditor or auditor of such year in which the fraud was conducted. Again, this is not correct because the auditor has to report to the central government. D. If an auditor of the company has a reason to believe that the offensive fraud involving of 1 crore or more has been committed, okay, in the company by its officer or employee, which is not pertaining to the current year, then the auditor shall report the matter to the previous year auditor or the auditor of such year in which the fraud was committed. He shall not report the matter to anyone else. Again, this is also not correct because the auditor is required to report to the central government. Hence, in the current case, the correct option is B. Now, let us see the next question, which is in continuation to this only. Okay. Assuming the audit team identified the issue on 10/10/2022 and reported the matter to the board and audit committee on 11/10/2022 seeking their reply. However, until 25/11/2022, no reply was received and hence the audit team forwarded their report along with a note containing the details of the report that was forwarded to the board and audit committee, for which the team has not received any response to the central government on 9/12/2022. So what audit committee or what audit team did is that they identified the issue on 10/10/22. They reported the issue to the board and audit committee on 11/10. Okay, seeking a reply, but no reply was received. And hence audit team forwarded their report to central government on 9/12/2022 with a note that okay, we have not received any reply. Okay. After getting the knowledge of reporting made by the audit team to the central government, board filed a complaint with ROC that the audit team has reported to the central government in haste and without waiting for their reply. As per the board, the provisions of the Company Act allowed 90 days time limit to reply. Until that time, the audit team should not file their report. Hence, the audit team has acted in haste and with modified intentions. So that is a complaint that has been filed by the board, that the audit team has acted in hurry. Now the audit team has approached you to seek a second opinion on the provisions of Companies Act regarding the reporting on fraud and the time limit within which the audit team should report the matter to the central government. Kindly guide the audit team. So in the current case, you tell me what is the correct way, whether the board is correct or audit team is correct, and what was the correct way to report the matter. So, question number 1, whether audit team is correct or board is correct. So, board is saying that they were having the time of 90 days. Companies Act allows 90 days time limit to reply, but audit team filed before 90 days, and hence they have acted in haste and with modified intention. That is the complaint of board. Okay, but audit team is saying that no, they have acted according to the provisions of Companies Act. So who is correct, audit team or board? Come on, guys. Good, Namrata. Come on, guys. What do you think? Do you think the audit committee or board is correct? Okay. Good, Janvi. Come on, guys. Whether board is correct or audit team is correct. Because we need to understand what is it again requirement of 143.12 in the current case. Accordingly, we need to think about, okay, if this is the requirement of 143.12, what audit team has done and what board is saying. So we need to compare all three. Okay, so you need to understand the requirement of 143.12 in the current case. Okay, you tell me, what is the time limit that has been provided by 143.12 to report the matter to the central government? What is the time limit that has been provided by this 143.12 to report the matter to the central government? What is the time limit that has been provided by section 143.12 or rules made thereunder, okay, with respect to the reporting that is required to be done by auditor to central government? Absolutely correct, Namrata. Let us see the provision. So we discussed that the auditor is required to report. Now how? So there's a rule 13. Okay. Rule 13, which talks about how the reporting is required to be done. Let us see the rule. If an auditor of the company in the course of their performance of his duties as statutory auditor has a reason to believe that the offence of fraud, which involves or is expected to involve individually an amount of rupees 1 crore or above, is being or has been committed by the company against the company by its officer or employees, then the auditor shall report the matter to the central government. Okay. The auditor shall report the matter to the central government as under. The auditor shall report the matter to the board or audit committee as the case may be immediately, but not later than 2 days of his knowledge of the fraud, seeking the reply and observation within 45 days. Means, first of all, they need to report within 2 days. Not later than 2 days means within 2 days. And then they need to give them 45 days for the reply. Okay. From the date when they report to the matter to the board and audit committee. Then, on receipt of such reply or observation, the auditor shall forward his report and reply or observation to the board or audit committee along with the comments, okay, to the central government within 15 days from the date of receipt of such reply or observation. So the time limit to the board or audit committee is of 45 days. Then more 15 days to the auditor to reply to the central government or to report to the central government. So within 50 days from the date of receipt of such response or reply or observation, auditor is required to report to central government. Okay. Now, in case when no reply has been received, in case where the auditor fails to get any reply or observation from the board or the audit committee within the stipulated period of 45 days, he shall forward his report to the central government along with a note containing the details his report that was earlier forwarded to the board or audit committee for which he has not received any reply or observation. So again, the limit is 15 days only, but once the 45 days are over, then he need to forward the report to the central government along with a note containing details that his report was earlier forwarded to the board for which he has not received any observation. So the time limit is 15 days only. So he needs to respond to the central government within 15 days after end of 45 days. Okay, after 45 days. Now let's go back to the question. Now in question, the team identified issues on 10/10 and they communicated to the board and audit committee on 11/10 within 1 day. So they were allowed 2 days, but they communicated within 1 day. So that is well within the time. However, until 25/11/2022, no reply was received. So from 11/10/2022 to 25/11/2022, these are 45 days. Okay. So for 45 days, the audit team waited, but they did not receive any reply. And from 25/11, they have to report to the central government within 15 days. So from here, the 15 days ends on 10/12/22. But the team has filed on 9, a day before. So they are well within the time limit that was given to the auditors under section 143(12) and the rules. So they waited for 45 days and then they were given 15 days by the rules to report to the central government, and within 15 days they reported matter to the central government. Now the board which was saying that they are allowed the time of 90 days, that is incorrect. They are not allowed the time of 90 days. They were only allowed the time of 45 days from the date when the matter has been communicated by the audit team to the audit committee or board. Okay. So in the current case, the contention of the board that the complaint of the board is not correct, the audit team is correct. Clear? So the audit team is correct and complaint of board is incorrect. Clear? Any doubts? Any doubts, guys? Any doubt in the current case? See, you need to understand the provisions and accordingly you need to respond to the question. Okay. So here it was a classic case of Rule 13, application of Rule 13, that when a fraud is required to be reported to the central government. How are you identifying the questions? Like, do you think the questions are easy or difficult? Are you enjoying the questions, guys? A small feedback will be helpful for me. So are you liking the questions? Are they easy or are they difficult, complex? How are they? A small feedback will be appreciated. If you can just give me a small feedback, okay, like how the questions are, whether you are liking it, whether you are not liking it, do you find it useful for the understanding of the concepts or the sections or not? Thank you, Janvi. Okay. Thank you, guys. Thank you for the feedback. So let's move to the next question then. Very interesting question, the next one, because it will again enhance our understanding about the topic. Okay. Manpreet Auto Private Limited, a fully owned subsidiary of Super Auto Limited, a BST listed entity, appointed Shan and Company their statutory auditors for financial year 22-23. Following was the were the unaudited figures of Manpreet Auto Limited for year ended March 22 and 23. So these are the numbers. Total turnover 25 crores for FY 21-22. Total paid up capital 22-23 1.3 crores. Total turnover for 22-23 27 crores. Outstanding loans as on 31-3-23 2.5 crores. During the year, Manpreet Auto Private Limited received a notice for initiating of a proceedings under the Benami Transaction Prohibition Act. However, the company and its legal counsel were confident that these proceedings are not appropriate and that the outcome of these proceedings would be in favor of company only. Hence, no disclosures were made by the company as it would mislead the readers of financial statement and would negatively impact the goodwill of the company. Shan and Company would like to understand whether any reporting for the above matter is required to be made by them. If yes, then the appropriate place in the report. Kindly guide the Shan and Company. So Manpreet Private Limited has these numbers and this particular thing. A transaction, or you can say they have received a notice for initiation of a proceedings under Benami Transaction Prohibition Act. Okay. The company's legal counsel were confident that these proceedings are not appropriate and will be in the favor of company only. Hence, no disclosure were made by the company as it would mislead the company's reader of financial statement and would negatively impact the goodwill of company. Kindly guide Shan and Company. So you tell me where this matter is required to be reported. So turnover is given for FY 21-22. Paid up capital is given. Okay. Outstanding loans are given. Everything is given over here. Come on, guys. So these are the numbers for 31st March 21 and 22, which are given. Okay. Shan and Company are the statutory auditors for financial year 22-23 of Manpreet Auto Private Limited. You tell me where the reporting is required to be done of the above matter. Come on, guys. Where the reporting will be done for the above matter, for this particular matter. Very, very important question. Because again, this will enhance your understanding about the particular topic. Sorry. How will you report the matter? How the Shannon company is required to report the matter? Okay, let's go one by one. First, I'll give you options. You tell me how you will, whether this is done or not. Let's go one by one. Number one, whether reporting under CARO 2020 is applicable. Question number one, whether reporting under CARO 2020 is applicable. Before I need to understand whether I need to report in CARO, I need to understand whether the CARO 2020 is applicable or not. Okay, so I need to understand that. So whether the reporting under CARO 2020 is applicable to this company. Come on, guys. Whether reporting under CARO 2020 is applicable to this company or not. Very important to understand this particular concept. I am only required to report in CARO when the CARO is applicable. So first I need to understand whether CARO is applicable or not. Whether CARO is applicable or not. Quickly, guys. First, establish whether the CARO is applicable or not. In the current case, we have the numbers of turnover, paid up capital, outstanding loans, okay, private limited company, whether CARO is applicable or not. Come on, try. Till the time you will not try, you will not get the appropriate understanding of the concept. Trust me. Very important here. Very important point I will be discussing. I am going to discuss very, very important point here. Because see, CARO is applicable, okay, to all companies, but there is an exemption given, okay, to small companies Okay. Exemption is given to small company. Now, to understand whether CARO is applicable or not, I need to understand whether this is a small company. First question. To understand whether the CARO is applicable, I need to understand whether this is a small company or not. So if it is not a small company, then I'll check for the next steps, next conditions of the CARO. But first I need to understand whether this is a small company. So do you think it's a small company? Do you think it's a small company? Do you think it's a small company or not? Come on, guys, quickly. What is the provision and definition or criteria for a small company? I'm waiting for your answer. Whether this is a small company or not. Okay. To understand the small company, there is a definition of small company. Remember? So, for small company, turnover of previous year should be less than 40 crores and paid up capital, paid up share capital should be less than 4 crores. Then only I can call a small company, and that should be private limited company. So if these conditions are satisfied, then it will be a small company. Okay. Now, in the current case, okay, these conditions are being satisfied. These conditions are being satisfied. But there is one more condition of small company, that it should not be a holding or subsidiary company. Okay. So there is a definition in the small company that it should not be a holding or subsidiary company. In the current case, Manpreet Auto is a fully owned subsidiary of Super Auto Limited. So it's a subsidiary company. If it is a subsidiary company, then the answer to my first question, whether it's a small company, answer will be no. It's not a small company. Now question B. Whether the exemption of private limited company is applicable to this company. So the exemption of private limited company is applicable based on 3 conditions. Number 1, paid up share capital less than 1 CR. The paid up share capital should be less than 1 CR. My turnover should be less than 10 CR. And my outstanding debt should be less than 1 CR at any point in time. If all these three conditions are satisfied, then only I get the private limited exemption. Okay. In the current case, my paid up share capital is 1.3 CR. So I'm not going to get this exemption. If I'm not going to get this exemption, then again, answer is for this is no. This is not a Section 8 company. This is not a banking, insurance, or any such company. And hence, CARO is applicable. So the answer to the question number 1 will be yes, CARO is applicable. So most of the student will, fall under this particular thing that, okay, this is a small company and CARO is not applicable. But that is incorrect because small company definition excludes holding or subsidiary company. Okay. So if it is a small company, but if it is a holding or subsidiary, then it cannot be a small company. So the definition specifically excludes my holding or subsidiary company. And this is a holding fully owned subsidiary of Super Auto Limited. By default, it's not a small company. Okay. Now, if CARO is applicable, then whether I'm required to report this Benami transaction prohibition notice of initiation of proceedings under CARO. So under CARO, there is a clause, okay, which talks about reporting on such type of transactions, such type of proceedings. That is para 3.1. Whereas Benami property proceedings, if they are any. So what that para says that whether any proceedings have been initiated or pending against the company for holding any Benami property under Benami Transaction Prohibition Act and rules made thereunder, if so, whether the company has appropriately disclosed the detail in the financial statement. So in the current case, proceedings has been initiated, but the company has not disclosed the matter in the financial statement. Just a minute. Yeah. So I need to report in CARO para 3.1. Okay. That yes, the proceedings has been initiated, but company has not disclosed in the financial statement. Number 2, where else reporting is required. CARO fine, but other than CARO, is any other reporting required? Other than CARO, is there any reporting required? To understand that, first let's understand another question to this. That is that whether any specific reporting requirement is there for the company under Schedule 3. Is there any specific requirement of reporting is there for this type of transaction under Schedule 3? So do you think this type of transaction is required to be reported under Schedule 3? What do you say? So am I required to report this transaction, or the company is required to report this transaction under Schedule 3? Come on, guys. Any reporting requirement under Schedule 3? Come on, guys, quickly. Whether any reporting requirement under Schedule 3 is applicable to the company? If yes, then what is the requirement, reporting requirement? If yes, then what is the reporting requirement? Come on, guys. Other than CARO, is there any reporting requirement for this under Schedule 3? Okay, which division of schedule will be applicable here? Which division of schedule will be Schedule 3 will be applicable here? Guys, till the time you will not look into the details of the Schedule 3 or applicability, it will be difficult for you to answer the question. You need to read the material, you need to read the provision, so then only you will be able to understand the concept here. Because without that, it is very, very difficult for you guys to see. Without understanding the concept, it is not feasible, to answer the question. And to understand the concept, you need to understand the provision. What is the requirement of the provision? Okay. Now, to understand which division is applicable, you just need to look into the question. A single line of the question can, give you the clarity on that. Okay. Now, if you read the question here, okay, if you read the question over here, just a minute, sorry. This particular company, okay, this particular company is the subsidiary of fully owned subsidiary of a BSE listed entity. Now, if a listed entity is there, to them division 2 is applicable, NDS are applicable, and as per the rules, okay, if you see the rule 4 of the company's Indian Indian accounting standard rules, okay, over there it is said that holding, subsidiary, joint venture or associate companies of companies whose equity or debt are already listed are required to comply with the Indian accounting standard. So by default, it is division 2 because Indian accounting standard is applicable. So now I understood division 2 is applicable. Okay. So one single line will give you the clarity. Okay, division 2 is applicable to them because it's a fully owned subsidiary of a listed company to whom division 2 is applicable. NDS is applicable. Okay. Now, if division 2 is applicable, then whether any reporting requirement in division 2 is there? Answer is yes. Let's see the reporting requirement. So if you go to the additional regulatory information, okay, over there is a clause of Benami property. In that, it is specifically said that details of Benami property held, where any proceedings has been initiated or pending against the company for holding any Benami property under the Benami Transaction and Prohibition Act and rules made thereunder, the company shall disclose the following: details of such property, amount thereof, details of beneficiary. If the property in the books, then the reference to the item in the balance sheet. If the property is not in the books, then the fact shall be stated with the reason. Where there are proceedings against the company under this law as a better of the transaction or as a transfer, then the details shall be provided. Natures of the proceeding and status of the company's view on the same. So if there is a proceedings initiated, then company needs to provide all this detail. And if company does not disclose this detail, means they are not complying with Schedule 3. If company is not complying with Schedule 3, then again the question comes up for the modification of your audit report. So there is a specific requirement of Schedule 3, and based on this specific requirement of Schedule 3, the auditor, like the company has not complied with the requirement, and accordingly the auditor needs to modify his audit opinion. The same, actually, if you see division 1 also, the same reporting requirement is present in division 1 also. So this is division 1 to which to accounting standard is applicable. So the same reporting requirement is there. Same reporting requirement. Irrespective of division 1 or division 2, the company is required to report the transaction in their financial statement. Okay. If the company is required to report and they have not reported, again, there is a question of modification. So in the current case, whether there is a specific requirement, yes. Yes, there is specific requirement. And company has not disclosed as per requirement. As a result, there will be modification to the audit report. Okay, there should be a modification to the audit report. And if I am modifying the audit report, there is one more. See, in question, it's appropriate place in the report is there. I know, but other than the report, other than the audit report and the CARO, there is one more, point that is to be kept in the mind. Whenever I am modifying the audit report, I need to refer to SA 260. SA 260 requires us to communicate with those charged with governance when there is change in the content or modification in audit report. Remember? So SA 260 says that when there is a modification or when there is a change, any matter which is giving rise to a modification or change in the form and content of my audit report, I need to communicate the matter to those charged with governance before I modify my audit report. So I need to report to the, I need to communicate to the those charged with governance also under SA 260. Clear? So what are the reporting requirements? One, CARO, because it's not a small company, because the private limited company exemption is not applicable. CARO is applicable. Para 3(1) of the CARO will be applicable where this reporting is required. Company has not made any disclosure, but Schedule 3 requires a disclosure, and hence a modification in the audit report is also required in the current case. Number 2, reporting as per SA 265 or SA 260. And hence, accordingly, these are the places where Shan and company should report the matter. So the important point for the question, okay, was number 1, the definition of small company. Under the definition of small company, there is an exclusion that provided nothing in this clause shall apply to a holding or a subsidiary company. So that is the first point that was important, that if it is a holding company or subsidiary company, it will not be a small company, irrespective of these conditions. Okay, irrespective of the conditions, it will not be a small company. Okay. Because it's a holding company or subsidiary company, and this is a proviso. It says that nothing in the clause shall apply to a holding or small company. Means it is a more specific than the conditions. Okay. Number 2, rest of the exemptions, which is it is not a banking company, not an insurance, not a Section 8, not a OPC or small company, not even a private company. Exemption is applicable because its paid up share capital and reserve should not be more than 1 crore as on balance sheet date. And here the word "and" is used. So I need to satisfy all conditions. My first condition itself was not getting satisfied. Irrespective of the other conditions, this is also not applicable. Private limited exemption. So by default, my CARO will become applicable. Okay. And CARO is applicable, then I need to report the matter this. Then SA 260 and accordingly SA 705 modification. Clear? Any doubt? Any doubt pertaining to this question? See, guys, till the time you will not refer to the provision, you will not refer to the sections or the, let's say in CARO, the paragraphs, you will not be able to understand whether any reporting requirement is there or not. For these type of questions, I request you to refer to basically the Schedule 3. What are the requirement of Schedule 3? You need to collate all the things. Okay, you need to refer to the Schedule 3. Okay, this is my reporting requirement of Schedule 3. This is my reporting requirement of CARO, whether CARO is applicable or not, whether Schedule 3 Division 1 or Division 2 is applicable, which division is applicable, whether modification is required or not. So you need to understand from all sides and then accordingly you need to report. Trust me, a question in this particular question with a small change, I can include tax audit also. So whenever you read a question, you need to think from a holistic approach. Okay, whether CARO is there, whether companies reporting under Schedule 3, whether tax audit, any other reporting. It could be a lot of things. Trust me. I could merge few things and make a one simple question. But at the end, if you are clear with your concept, if you are clear with your provisions, okay, then it will be easy irrespective of number of the reportings which are merged together. If you read company set appropriately, if you know the schedules, if you know the CARO appropriately, it won't be a problem for you to answer any question. Trust me. But for that, understanding of the provision is must. And if you feel that, even after reading, you are not understanding the provision, if even after reading, you are not able to get the or remember the provision, I'll say you to practice the questions. Practice more and more questions. The more questions you will practice, the more understanding you will get. Okay, this is how I need to report. This is how I need to report. Sometimes what will happen is, see, CARO is applicable to a lot of companies. Okay, let's say public limited companies. You can go on the internet, download the public or annual reports of the company where you will have a CARO. See how reporting is done over there. If you read that also, the practical examples of reporting under CARO, you will gain some understandings. You will understand, okay, this is how this matter is reported. This is how this matter is reported. So I request everyone, please read the provisions, read the topic, study material very thoroughly, practice as much as you can, and then see the difference. Okay. Any doubt, guys? Any doubt? Okay. If no further doubts, then guys, the next lecture on Monday and Tuesday, we have a audit committee, corporate governance, and LODR. Okay. Over there, rather, I will be explaining the provisions in detail. Okay. We will be doing practical, but it will be a mix of practical and provisions, because there are certain amendments that I want to cover in that particular topic. But I want you to be also ready with the provisions. So whenever I will discuss the practical questions, it will be easy for you to understand. Okay, and easy for you to answer. So next lecture, audit committee, corporate governance, LODR. I want you to be ready with the provisions. So whenever I will discuss, at least it will be very, easy for you to understand. And whenever you are solving the question, first write your own answer. Okay, write your own answer. Then you see, okay, whether the answer that you have written and the answer that is given, like suggested answer, how much closer it is to your answer, how much your answer is closer to the suggested answer. And then identify the differences where you are lacking. Whether you are lacking in the language, whether you are lacking in the concept, whether you are not able to understand the question properly. So where you lack. So that analysis will also help you to understand. But for that, without seeing the answer, first write your own answer. Okay. If no further question, guys, then thank you for participating in today's lecture. I'll see you in the next lecture. Okay. Thank you, guys. Thank you for your time. Thank you.